So hello everyone and welcome along to this live webinar. And today our topic is bridging finance, and we'll discuss the bridging finance in general and also how you can apply for bridging finance using Lendlord. And also after a submission, how you can track your application, and basically we'll describe the entire process and we'll show you how you can use your Lendlord account in order to get bridging finance. If you are watching this webinar on our YouTube channel, feel free to subscribe to our channel to get more relevant content. Actually, also, if you are now in the webinar, I will put this is our YouTube channel. As you can see, we have many videos with great content that can help you in property in general, but also will help you utilize Lendlord and make basically the best from our platform. So I will put the link in the chat. Now, if you have questions during the webinar, please feel free to put the questions on the chat. And so either we will answer as we go if it's relevant to the topic, or in the end, we will have a session for questions and answers. And if you are now just listening, please put yourself on mute. And if you have questions, you can raise your hand or just put it on the chat. All right. All right, let's start. So the agenda for today, I will start with a brief overview about Lendlord and the new features. And then we discuss in general what is bridging finance, the benefits of using bridging when you want and look to invest in property. Then we discuss how you can apply for bridging finance using Lendlord. And we describe the underwriting process at Lendlord, basically how it goes. Then we will show you how you can review and track your bridging application from your Lendlord account. And we also discuss briefly case studies, real examples of bridging finance that we originated on Lendlord. And in the end, we'll have the questions and answers session. So today we have in this webinar joining me Arye and Claire from our team. You can say hello, Arye, Claire. And
hi everyone.
Hi
Thanks for joining
guys.
us.
And yes, so we will get back to you later. I will start now with the first topic to show you. I think that what I will do, I will just show a brief overview about the Lendlord platform. And in a brief, I will discuss some of the new features that we released recently. So just to verify, you can see now the screen, Claire, like the app.
Yes, I can see it.
Perfect. All right. Okay. So Lendlord, basically, we have three main areas, functionality areas. One is invest. In the invest part, basically, you can source properties that are now out for sale. You can analyze the deals using the deal analyzer, and you can get market data and more information about the postcode using the postcode information page. So let's start with that. In the property sourcing, you have the auctions page where you can find properties that are now up for sale in online auction houses all around the UK. You can apply filters. It can be based on location or based on other parameters. The property list is a new feature. If you require more than 3 searches per month, you will need to upgrade to our premium plan, £99 per year. But with the property list, basically you can search per category of properties. For instance, if you want to see properties that are now land plots for sale or new build properties, etc., then you need to select the list, put the postcode, and then click search. I will not do it now, but it's a very valuable feature. The deal analyzer. So here you can analyze rental deals. You can start with typing the address, put the purchase price and the expected monthly rent. And the platform, using its default, will calculate your first year metrics and the long-term metrics. And starting this point, you can tweak and adjust the data. If you have refurb costs, you can use our new feature works plan. Also, it's part of our premium plan. If we have time in the end, I will show you how it works, but basically it will allow you to create a schedule of works for your project with all the dates and costs associated, and then you can also download it as an Excel spreadsheet or as a PDF. In the deal analyzer, you can also play with how much you're going to put in cash and how much you're going to take in loan. You can use our mortgage search based on your profile to see the latest rates from various buy-to-let lenders. Then you will need to update to enter your monthly operating expenses, the long-term assumptions, and then you will get your results. You can go to the prospect report to see a summary of your deal. You can also export it to a PDF. And in the postcode information, you can get more data about the postcode of the deal that you are now analyzing. But basically, for any postcode, you can see the 5-year capital growth, the current property demand in this area, some analytics about crime, price per square foot, data about demographics, schools, and more valuable information. So this is the invest part. If you want to get started in property or if you want to invest smarter, you should use this section of the app. The manage side of the platform is basically after you acquire the property or if you own an existing portfolio. And here you have several functionalities that can help you manage your assets, your portfolio. The My Portfolio page, this is the place to store all of your properties in one place. We keep more than 150 different data items on each property. But of course, there are no mandatory fields, so you can start with some details and then enhance it after that. You can apply filters. So if you have more than one owner in the account, you can see just the properties of a specific owner. If you have different ownerships, properties under private ownership or company ownership, you can also filter the data based on that. And you can also define different views. So you can either use the predefined views of the platform, or using the managed views, you can create your own view and select the columns you want to see. So this is My Portfolio. In the My Tenants page, you can manage your tenants and tenancies. In the payment schedule page, and by the way, I'm doing it fast because the main focus of this webinar is bridging, but just for people that don't know Lendlord, I want them to get a high-level overview. Payment schedule, you can track your rent collection. The Insights page will show you all relevant key events and things that basically you need to do. For instance, if you need to do product transfer on your mortgage product, to renew your tenancy agreement or your gas safety certificates, etc. My Documents is another new feature. It's also part of the premium plan, but it's a great feature where you can, if you subscribe to our YouTube channel, you will see the latest videos with a demo of the My Documents page. You can store documents under different levels, also your personal documents, and you can share the documents with others using the packages section. And then the last thing on the management side, you can manage your cash flow. So on the transactions page, you can link your bank account or you can import files and then allocate the transactions, the income and expense transactions to the relevant properties. And if it's rent, you can also allocate it to a tenant. The profit and loss page will show you the income and expenses per each property or subset of properties. You can also filter here the data. And then you have the reports. The reports you can generate P&L reports, property breakdown to see basically breakdown per property, expenses breakdown to see like on each category you spend your expenses. You have the same for the income, and also a tax report with estimation of how much tax you should pay by the end of the financial year. The interactive report is a great way to get a high-level overview about your portfolio. And then you can just go property by property and see the data. You can also update some of the figures from here. And you can also see how this property is ranked comparable if you compare it to the other properties in your portfolio. And the last section of the platform is the finance. And basically, the main focus of this webinar is the finance area. We did a webinar on how you can see mortgage product rates based on your profile and how you can apply online using our digital broker. And in this webinar, we will speak about bridging finance. So let's start with the first topic about bridging finance. So we'll start with a question, and Arya, please join me to this discussion. What is bridging finance, basically? Why, and basically why we need to use it, when we need to use it, if you can just say a few words about it. And then we will show like the use cases of when you need to use a bridging finance.
Thanks, Aviram. So the main purpose of bridging finance is all about the speed. It's about the speed of getting the finance in place or to fund a property that perhaps you can't get conventional funding for. So auction purchase is actually a very good example. Typically at an auction, you've got 28 working days to complete on the purchase. Most mortgage lenders will not be able to complete within that period of time, and therefore bridging finance is a great solution. Likewise, any urgent transaction, or for example, a property that's not habitable on the day of completion, a typical mainstream lender will not agree to lend on that property. So the objective of the bridging finance is to get you into the property, do the works, and then you can refinance. So that would be effectively your exit strategy. Another example, as you can see in the list, is the lease extension. A lot of properties not a lot of properties, but some properties will come with a very short lease, and that lease won't necessarily satisfy many lenders. Many lenders want a minimum of 75 years at the outset. And if you can't satisfy that requirement, conventional mortgage lending won't be available. So what you would do is use bridging finance, do a very swift lease extension if that's possible, and then refinance on a regular mortgage. Bridging finance, in a nutshell, is supposed to give you that flexibility to effectively, using the word, bridge between the purchase and refinance or sale or whatever exit strategy you wish to use. Hopefully that answers the question.
Yeah, it was great, great answer. Thanks, Arya. Okay, if you have more questions about bridging finance, feel free to put it on the chat. Claire, if you can see on the chat, if we have questions, relevant questions, please let me know. But in the meantime, let's speak about the benefits of using a bridging loan. But I think, Arya, you already touched that. If you have something to add, please feel free. I think the main thing would be speed, I would say, because bridging finance is definitely more expensive than a regular mortgage. But it's something that is easier usually to obtain, or you can obtain in a much, to be much faster than a regular mortgage. Would you agree, Arya? You on
Yes,
mute.
yes, apologies. I was just actually replying to the question that's on the chat.
Okay.
I can't multitask, apologies. Yes, it is more expensive and it's faster as well. And that's the whole point of it. It's more flexible overall in terms of, as a lender, you accept more perhaps deficiencies in the property, the condition of the property, and we just look to be more flexible. Obviously, the risk is higher, hence the rate is higher, but that's why bridging is typically very short term. Anything from 3 to 12 months is the normal time span that people want.
Yeah. Okay, thanks, Arya. Okay, so now let's see how you can actually apply for bridging finance using the Lendlord platform. So if I go back to the platform, I will go to the invest part. So first, if you're now searching for an auction lot using our auctions module, then you will see immediately what Lendlord can offer in terms of loan amount. And if you go into the lot, also in terms of the rates range and the arrangement fee. This is by the way, these are indicative terms. You will need to submit an application. I will show you in a sec how you can do it to see the full terms. So basically it's indicative, and also it's based on the guide price, in this case in an auction, which probably will not be the purchase price. So the way we provide bridging, I think other bridging lenders will do as well. We will look at the purchase price or the property valuation, but the lower between of them. And based on that, we will calculate the LTV. The LTV is loan to value. It means that, for instance, if you got 75K on 100K purchase price, it means 75% loan to value. We will go to 75%, but only if the borrower can service the loan, pay monthly interest. But if he can't, we can definitely, I think most of the cases, what we do, we are capitalizing the interest. And then you just need to pay the interest when you repay the entire loan. But this will decrease the loan to value to around 70%.
Aviram, can I just add, the only other alternative is to add additional security. If there's background security that can effectively change the overall loan to value, then you can achieve on the particular purchase higher than 75%, but it does require additional security in the background.
Yes, absolutely. If you have an additional security, definitely we can lend you even more than purchase price. Purchase price depends on the second security. All right. So on the auction lot page, you can see initial terms, but very indicative terms for bridging. You can also see the first the initial analysis on rental and also flip. You can go now, let's go to the flip analyzer. So the flip analyzer is a great tool if you want to analyze a buy to sell strategy. So you buy the property, do some refurbishment, and then sell it out, and you just in order to make profit. So you can analyze the deal. You can also generate the works plan. Let's say I purchased it in 100K. I had some closing costs, and here I need to decide how much I'm going to put in cash and how much in loan. And when it's a loan, it's bridging finance. So if I take it, let's say to 70%, then and I sell it in 140, so this will be my profit, and it really depends on the length of the project. And if I was able to sell it with more, then I will see more profit, of course. So from this page, you can click on finance this deal, and you can see what Lendlord can offer in order to fund this specific deal. But here again, it doesn't mean that this will be your rate. It can be lower, and it actually definitely can be lower than what the platform generates. But it will be around this amount. Unless during the underwriting process, we have discussions, we understand basically what you want to do. This can also impact the terms. So the way Lendlord works, there is an engine. We use technology in order to do all of the things that we do, that will assess the risk, will assess the specific case, and based on that will generate terms. And the third way you can apply and you can start the process is from the finance section in the menu. Click Bridging Finance, and then immediately we receive the questionnaire. So I will now show you how you just need to fill in this questionnaire in order to start the process for Bridging Finance. But if we have some questions that I know that you answer in the chat area, but it's worth basically just answering them out loud, perhaps it's worth. So if you can cherry pick a question that you think it's important, we can actually answer it right now.
I just want to explain what I meant by additional security. If somebody wants to purchase a property and wants more than 75% loan to value, but they have an investment property in the background that, say, has no mortgage, then we would happily use that additional security to support the funding of the new property. So it does require you to effectively have an additional property in the background. And yeah, so that, I hope, answers that question. And I just want to also say, when we present now as a digital lender by Lendlord, we are not a broker, we are the lender. We are the ones that make the decision, we lend the money, everything is us. So you are directly with the lender and not via a broker.
Yeah, absolutely. For the mortgages, we are a broker, but for bridging, as I said, we are the lender. All right. So let's start the questionnaire. The first question is the purpose of the loan. For this case, I will pick auction purchase. Okay, if the security is the security being offered first or second charge. I want to explain, like, I think that we received this question from time to time. Like, I'm not sure if everyone understand what it means charge and what is the meaning of first charge and second charge.
So a first charge is when a lender has the sole security of the property. In other words, you buy a property, it's like taking a conventional mortgage and you give the first charge. The first charge is if you default, that lender can take the property, repossess the property. A second charge is, say you have a property and you have a mortgage, I'm just going to say hypothetically with Santander, you have a mortgage property worth £100,000, you have a mortgage of £20,000, you arguably have £80,000 available equity in the property. Some lenders will allow you to go to another lender and take secondary lending, and that lender will take what's called a second charge. They sit secondary to the main lender. So I hope that explains what a second charge is.
Thanks, Arya. Yes. All right, let's continue. The estimated purchase price. So it's estimated because if you just now bidding on a property, you don't know exactly what will be the end price. So basically just put your estimation, then how much do you wish to borrow, and basically this will define the loan to value, and this is the main thing that will impact your rate. So as much as the loan to value will be higher, we will need to charge a higher interest rate, and you can see it on the right side, but again, those are indicative terms. So here basically we'll ask you to put your contact details so someone from our team can get back to you, and if you have some questions about the process, if you need help with your application. So this is important. We are basically a lender that it's called, like, in the area of non-regulated bridging finance. So basically we can lend only on buy-to-let properties. So we cannot lend money on residential, like the main residence. So you have to be, if you want to get a loan for bridging from us, you need to have a buy-to-let property. Then the exit strategy, and this is also something that is very important for us as a lender, because this is the way we can get back the repayment, the loan. So there are several options. Either you're going to do a flip, so you're going to sell the property in order to pay back the loan. You can sell other property you own. It's like can be another option. So basically, if you are in the process to sell or you intend to sell a property, then this can be also an exit strategy for your bridging finance. Refinance of property, I would say this is like most of the cases. So basically, you purchase the property. So either there is not enough time to get a mortgage, or you need to do some improvements in order to get a mortgage, or you want to add value before you get a mortgage. And then usually this will be your exit strategy. In this area, we ask you to put some text to describe basically what are you going to do, what is your plan about the exit strategy and how you're going to repay back the loan. Your approximate annual income will also impact the rate a bit. So we ask this question. The address of the property. If you apply from the auctions page or from the deal analysis, the deal analyzer, then it will take automatically the address. You don't need to type in it twice. How many properties do you own? So this is important for us, and I will explain. So as a lender, by the way, we definitely do first-time buyers, and it really depends on the borrower profile, background that we need to check, and we have responsibility, with our funders. So we have to do our due diligence. But of course, that if you are an existing landlord, experienced property investor, it is an advantage. But I have to emphasize that we definitely we can lend for first-time buyers. So this basically is important question. And then you will have several questions in terms of credit history. And I was saying basically, theoretically, yes, we can lend even if you have credit issues in the past. But I have to say that this might impact your exit strategy. And because of that, this might cause that we cannot lend in the end. And I don't know, perhaps you want to explain, but the exit strategy is so important for us as a lender. So we need to sometimes to look on any given case in two eyes. One as a bridging lender also, but also as a mortgage lender, because we need to understand and we need to know that the mortgage, if the exit strategy is refinanced, a mortgage lender will actually refinance this property.
I'm happy to, exactly as Aviram said, the key thing for us is an exit strategy. And unfortunately, a lot of the time, people will say that they can refinance the property. Sometimes we know that they won't be able to refinance the property because the property is not a desirable property to a mainstream or specialist lender. They may have other issues in the background. An extreme case would be somebody who's done an IVA, somebody who's had a CCJ in the last 12 months. The chances of actually getting a refinance on deal is very negligible. And as a lender that wants to be repaid, we're not in the business of lending money and then leaving you with the problem of refinance. We want to know that the refinance strategy is actually really feasible. So that for us is the most important thing. And if anyone's applying, the more information we can have on the exit strategy, the better. For someone who's going to refurbish and then sell, that in some cases is the easiest option, but that doesn't mean that I would say most people actually do go for refinance, and that's absolutely fine as long as the individual knows that they can get the refinance, because that's something we will look at just to check the feasibility.
Yeah, thanks, Arya. So after you answered the credit question, we asked you what stage are you at, and just to understand if you are now researching the properties that you currently view, or you already made an offer, or you have had an offer that already accepted. So this will give us some indication about where you are at, and then we'll ask you what is the property type, and also the urgency of receiving the funds. Then we'll ask you how much. So if you are going to improve the property, or you use a BRR strategy and you're going to do refurbishment, we want to know how much in terms of cash you are going to invest. And you can see that if the investment is some percentage from the loan amount, then the model basically will need to increase the rate, because the risk will go up for us if there is more than, I would say still like it's between light to heavy refurbishment, but based on that, the rate will be calculated. But again, this is an indicative rate, and we are reviewing the rates after you start the process. So don't worry, even if you see some indicative rates, you can speak with the team, and we will review before we generate the heads of terms. And then the last question will be, what is the GDV? Basically, what is the value of the property you expect to see after you complete the works, the refurbishment? This is also a good indication for us. There are some cases that we also do. We will also look to do like a second advance based on the GDV, based on the expected value. So this key item is important. Then you click next. You can see in a high level the terms, and I will explain what it means initial interest rate, because we have a model that will allow you to get lower rates if you repay the loan early. So the next thing basically you need to do is click on the proceed button, and then once you click on proceed, our team will get a notification that you actually submit an application, and we will get in touch. I think that at this point, perhaps Claire, will let you present you and like basically the sales team and the bridging team that actually help the customers with the process. So Claire, please feel free to introduce.
Hi everyone, I'm Claire. I oversee the bridging department here at Lendlord and assist all our customers with the full application process from start to finish. As soon as an application has been created in the system, I will then contact you, or one of the other team members will. It's always good if you can upload the documentation to your application when you fill out the online application form, because obviously that way we can then provide you with terms. Once we have the full application, it will then go to our underwriting team for review. Once our underwriting team review the application, we will then come back to you with terms subject to check. And this usually happens within a few hours, obviously depending on the time that you create the application.
Yeah.
And that's basically the process.
Thanks, Claire. The good thing, I think, like with Claire and the team, is that you will get a personal service. Any question you have, we will help you through the process. We'll explain you how the underwriting process works, what happens after we submit the application and start the evaluation step and the legal step, and also what happens after.
Just quickly, just to let you know, there are no obligations, and if you need terms like prior to an auction, please do come to us and complete the application, because even if you don't have an accepted offer, we can come back to you with terms, and that way you know exactly what finance you've got if you want to bid on a property.
Yes, absolutely. And Claire, you can put your calendar on the chat. So if you have some questions or you want to discuss a specific case, feel free to schedule a call. So after you started the process, it will take you to your Lendlord account. And here we'll ask some additional information. So who the applicant, is it individual or you apply as a company? And then if you're individual, the platform will take it basically from the data from the portfolio owner page. So if you already enter this data, it will automatically be filled in. Click next, then we will ask you some questions about the property. It's a different application than before. Because of that, I need to type again the address, the internal area in square meters. Let's see if there is property activity, also something that we want to know. And because I marked it as an auction purchase, we want to know the date of the auction, because this will basically guide us in terms of the urgency of receiving the funds. Click next, then you can see your application and click proceed. Then you can review the indicative terms. And here I want to speak about the dynamic model. The dynamic model will basic what it says that if you repay the loan early, your interest rates will be lower. It really depends on the time you repay the loan. It can be 3 months, 6 months, 9 months, or 12 months. This basically will encourage you to repay early. You can repay early the loan without any penalties after 3 months. So the minimum interest charge is for 3 months. Then I will click upload documents. And so here you can do it by yourself. Just upload the documents that we need for the property. You want some information about the property. It can be either a link to Rightmove or Zoopla or the auction house page, or a PDF that you downloaded, or just text that you write. That's fine. Proof of deposit, very important. So basically, if we lend 70%, you need to bring the other 30%, but also you need to pay the stamp duty. You need to pay some fees, and you need to pay the refurbishment if we don't do a second advance. And because of that, we want to see that you have enough funds to complete the purchase and the refurbishment. The works plan is important for us to see that you have a plan for the refurbishment. Don't worry, if you don't have it now at this stage, you can still proceed. We will guide you, and we can basically provide terms subject to receiving some of the documents. Then we need the personal documents of the applicants. It can be passport copy, utility bill. Utility bill should be from the last 3 months, your latest payslip or tax computations, your personal bank statement. By the way, it can be the proof of deposit, but proof of deposit can be perhaps from other sources. So there might be a difference between those two. And your credit report, we ask you to go online, basically can generate a report and upload it to Lendlord. Then after you upload all of the documents, your case will go to underwriting. Do you want to say a few words about our underwriting process, basically what happens now? And as Claire said, this process can be very fast. So we can complete the underwriting process in 2 hours. So we had cases that in the same day, we got the application, provided heads of terms.
So the key thing with underwriting is the more information we've got in terms of the source of funds, so that's the proof of deposit, the property information, and what you're looking to actually achieve or do, your exit strategy is really key, as I said before, and that helps us underwrite, and that helps us turn around the application really quickly. The works plan is important because we want to know what kind of works are required, because some refurbishments are fairly minor, but a major work plan may require more detailed analysis by us because it could have an impact on the valuation. But in a nutshell, the more you give us, the better the outcome for us in terms of turning it around to give you a decision. I will say that I do want to touch on actually the relevance of the payslip. Although we're not necessarily looking at affordability because the interest is capitalized, it just shows us that you can support background information and your lifestyle. It just helps us in just getting an overall view of your position, but it's not absolutely essential unless you're paying monthly interest instead of capitalizing. In that case, the payslip or tax computations is really important.
All right, thanks, Arya. So let's go back to the agenda. So Arya, you just explained about the underwriting process. Now, how to review and track your bridging application. So basically, you have it here on the finance section in the menu. Go to open applications, bridging applications. If you have more than one, you will see them here, and click review application. Then you can see the step you're in right now. And after the upload document step, and we'll start the underwriting. After the underwriting, you will need to sign the heads of terms and pay the admin fee and the valuation fee. Then we will instruct the surveyor and the legal team. Usually we can do it in parallel, but we will need to wait for the valuation, of course, to complete the case. So when we instruct the surveyor, we get in a few days the booking of the inspection. We receive the valuation report, and valuation report can basically it can bring us some information about the state of the property, but also about the real value. It can be higher than the purchase price. It can be the same as this purchase price, and can be from time to time, although I have to say that it's not the majority, can be lower than the purchase price. If it's lower, we will need to adjust the terms accordingly, but this is the process when you get any mortgage or with any other bridging lender. Then the legal process. So you will need to have your solicitors that will work with our solicitors. And I think that if we speak about speed, when we have when we see solicitors that respond fast and promoting the process, then the deal can be done in even like in a few days. So it really like a lot depends on the legal, if you want to complete fast. And then after the solicitors complete their work, then we can release the funds if everything is okay. Yeah, so basically this is the process and the way you can track your application. With any step, you will receive a notification to your email that your mortgage application got progress. And of course, our team in the background will be in touch with you, and you can call us at any time. All right, so let's speak about a case study. I think that I have in mind like one of the last deals that we just funded. Claire, you want to speak about it, or should I start, and just feel free to jump in?
I can give a quick overview, I don't mind.
Yeah, go ahead.
So we had a customer that needed to complete in less than 14 days. They were purchasing a property at auction, and obviously, we have to meet all our customers' expectations on completion dates. So we managed to get the valuation scheduled and all the legal process completed within that time frame, and we were able to complete the deal on time, making our customer very happy with their new purchase. That's a very short overview. If you want to add anything, Avram, please do.
No, I think it was.
Can I add something? The key here was that the solicitor on both sides, our solicitor and their solicitor, were incredibly communicative, and whatever was requested was provided really promptly. So with complete cooperation of everyone, that includes us, you can achieve a really fast turnaround. And yeah, that's an ideal scenario.
And obviously I had my eye on the application throughout the whole process. If we were waiting for our customer solicitor to respond, I was chasing our customer to tell them what was required so they could then chase their solicitors to make sure that the requirements were sent over very quickly and on time.
Yeah, absolutely. Thanks, Claire. Now let's take some questions. Claire, Anya, if you can help me pick some of the questions, even if you answered already in the chat that might be relevant. In the meantime, I'm putting some of the links. So if you want to sign up to Lendlord, create your account, you don't have to take bridging finance with us, but you can use the platform and benefit from the great features. And also I put a link if you want to apply for bridging finance with Lendlord. And I will put again our YouTube channel. If you haven't subscribed yet, just feel free to do it now to get more content. Okay, so let's answer some questions.
Can I just pick up on one? There seems to be some confusion. We will lend to a limited company and we will lend to individuals. Where it's a limited company, we will typically take a debenture on the company and we will also take personal guarantees. That's pretty much industry standard. In terms of background portfolio, for us, that strengthens the proposition of the application. It's not if you've got 100 properties that we won't lend to you. On the contrary, that would probably demonstrate to us that you are serious borrowers, serious landlords, and that gives us a lot of comfort. But as Aviram said before, we'll also consider the first-time landlord who's just getting into the process of purchasing properties. So we're actually fairly flexible. We want to lend. Likewise, we want a fair proposition, a safe proposition to us, and what works for you as well. So we're always going to try and be very realistic on what we will lend on, and any normal property, standard property, we would expect to be able to lend on it subject to valuation.
Can I just add one thing? Also, on a company application, if there are more than one director, we will also need the other director's documents. So that's the only difference between the documents that are required as well.
I'll add shareholders as well, shareholders over 25%. So it's shareholders, directors, they're all relevant to the application. Very minor shareholders, subject to legal advice, we will probably ignore, but the vast majority of the shareholders will need to be on there.
Okay, so there is another question. What is the average percentage that Lendlord charge for bridge loan? Great question. It really depends on the case. By the way, we just got repayment of a loan with 0.63% because the borrower repaid the loan very early. And our dynamic product, basically, if you pay the loan after 3 months or after 6 months, you can get very, very low rate if you compare it to other lenders. But of course, if it goes to the 9 months, 12 months, I think that in many cases, we can be competitive. And of course, because of that, we encourage you to speak with us after you start the process. If you have an alternative offer, let's see, let's discuss, and perhaps we can do something. Are you able to recommend reliable legal support that can make the process quicker, or must we always get our solicitor? So in bridging, we cannot do a representation. We can recommend, but I think that it's better that you will do your research and get a good solicitor that, as like with the case study that Claire just spoke about, it definitely the solicitor, they made a change, because when they are engaging, communicating, and basically providing all the requirements on time, then you as a borrower can get the funds very fast, and you know that it basically translates to cash at some point, because this will help you start the projects sooner get the finance done and get to the next step. So solicitors are very important. All right, let's see if we have. Can you lend 100% of refurb costs? Can you lend the money for the start of the refurb works? All right, I'll try to answer it. So theoretically, yes. So it really depends. So when we speak about funding refurbishment, we will look to do like a second advance and rarely like perhaps also a third advance. And this will be based on the GDV. So, but we will require you to start the works before we release the second advance. And then we will send the surveyor for a second inspection, a GDV evaluation. And based on that, we can lend more. We prefer to do it in just second advance, not the third advance, but it's also something that we can look at. So theoretically, the answer is yes. Arya, for you, how much months payslip we require for the director?
One.
Yes.
Oh, for a director, typically they're deemed directors for mortgage purposes are deemed as self-employed. So the latest tax computation will suffice. If a company director is really employed and not deemed as self-employed, then 1 month's payslips, it gives cumulative salary for the year. So that tells us what we need to know.
Okay, Christy asks, what if you are borrowing for the refurb costs rather than the purchase? How does the application differ? So in this case, I think that it means that you purchased the property already, perhaps in cash, and then we take a first charge and we can lend you up to the max loan to value that we can lend on this case, but this definitely can be used for the refurbishment. The good thing is that you can start the process, submit the application, get all the legal done, and then we can decide on a completion date. And this is very important. We encourage people to start the process, secure the rate, perform the valuation, complete the legal, and then basically we can set up a completion date so you can get the funds after you start the work, so after you need basically if you already purchased the property in cash. Okay, a good question from Jason. Does a bridging loan always require monthly repayments, or is it that you must repay the loan in full once your project is complete? Okay, so I think most of the cases you pay the interest, you don't do monthly repayments, but just in the end, and the interest is capitalized and you pay it when you complete the project or when you basically have your exit strategy done. Having said that, we have now a new product that we do offer 75% loan to value, but in this case, we will require you to pay monthly payments to service the loan basically. So, because you need to understand from our perspective as a lender, if we add the interest to the loan, at the end of the period, our exposure can be very high if we do even 70 or 75%. Because of that, if you can pay the interest on a monthly basis, then our exposure remains the same. So we feel more comfortable to lend 75%. I know that we are, let's take only 2 last questions. Okay, Ari, I see that you answered some of them. Let me pick 1 or 2.
Keith Jones had one. If basically they are accepted for a bridging loan, are future applications easier? So if they take a bridge with us and then reapply, will it be an easier process? We will have some documentation, but we will probably need some updated documents as well. But if we see that you've already paid back a bridging loan and it all went smoothly, then the second application will definitely be very, very straightforward, very quick, and we will always look to give the very best rates for returning customers.
Yes, absolutely. So, and we have several cases of customers that took more than one bridging loan with us. I think we have also examples of four loans. So it's definitely something that it will be easier from both sides. Like once you get your first one with us, to take the other ones in the future, it makes the process much easier. All right, so I think we will finish now this webinar. Claire, if you can put again your link, and I will put again the link to apply online for bridging, and
I'll also put my direct contact number if anyone wants to call and not book in a Zoom. So please do feel free to give me a call at any time.
Perfect. I also put the link if you want to apply online. Okay, so thanks everyone. Again, feel free to subscribe to our YouTube channel. If you need any help, not just with bridging, but with the Lendlord platform, so feel free to use this chat, send a message. It can be either you want to report a bug, or you want to suggest a new feature, or to ask any question. So just feel free to use this chat box. All right. So thanks, Arye and Claire, for joining.
Thanks everyone for joining us. Thanks everyone for presenting.
Thank you.
Thank you.
And thanks, Claire.
Thanks, Aria.
Bye-bye.